Hello again. This is the US Futures Weekly Chart Analysis for the week ending 25th of November 2022. First chart is the US Dollar Index Futures. Now this market did trade every day this week. The majority of the CME futures markets were closed on Thursday for Thanksgiving, and a lot of the traders also take Friday off and make a long weekend of it. So trading on Friday is often very light, which really gives you a 3.5 day trading week for most of these markets. The US dollar index, however, does trade every day. So this traded all 5 days. The volumes on Thursday and Friday were very low, and that's why the volume down here was very low. Just put the lines in quickly. This is as the market was rising, breaking out each time. Then the market broke down here. We've got an attempt to consolidate down here at the moment. Price this week closed just a fraction below the low of this widespread down bar. So it's threatening to break down further, but it hasn't done so yet. You can see that earlier in the week, this week, that price attempted to move higher, but the low volume suggests that there was no demand for higher prices this week, and price then fell in response. And you'll see in a lot of the corresponding markets, with this market, the US dollar index being lower, that allowed other markets to push higher in response. This market is threatening to break down. It hasn't done so yet, and it's really overall attempting to consolidate here adjacent to this congestion to the left. This is the E-mini S&P. This is S&P 500 index futures. And this market did test for supply and then pop up higher for the week as the US dollar moved higher and then traded lower for the week. So this traded the inverse. Volume was very low. It didn't trade at all on Thursday, and there was really very low volumes on Friday. Here's the recent lows and the previous lows. There's a little shelf through here, which sort of corresponds with that level nicely. Now this market was floating higher the last couple of weeks. It's not shown any intent since this bar. This was an absorption bar, and this week just floated higher on low volume. So we really need to see something more clear cut before we can say price is going to move higher. This is the level where you would expect price to move up to if selling pressure remains low in the market. And if price does start to come back, it's more likely going to stay within the range of this bar. A break below this bar's low would be significant. This is the US Treasury 10-year note futures, which also traded higher for the week, just slightly higher. Now volume appears high here. It was contract rollover this week. You can see it here. And this was a very low contract rollover. So that's probably suggesting that traded volume was actually fairly low this week. And that would explain the narrow spread on the bar. Price did float higher, trading the inverse of the US dollar, as you would expect. But once again, you've got some intent on this bar, albeit on low volume, so it wasn't that much intent. An absorption bar and some sort of low volume bar, I expect here. So you're not really getting much information over the last 2 weeks here. So we'll just need to see what the market does early next week to get a better guide on the market sentiment overall. Copper price futures, I say it every week, have been quite resilient through here and absorbed the strength in the US dollar and failed to move lower. This was a sign of strength for the market. When the US dollar started to roll over, this market was easily able to push higher in response. I was a little bit disappointed with how far price came back last week, but this week price just tested for supply. It only traded for 3.5 days. Volume was below average. Spread was quite narrow. This was really an attempt to consolidate. This was an attempt to absorb the supply being drawn out. Prices stayed within the range of the previous up bar, so that's a strength. I expect this market will continue to trade the inverse of the US dollar to some extent. It has shown strength previously and resisted moving lower when the US dollar was moving higher. So there's an element of strength remaining in this market, and I expect that to continue to be shown into the future. This is gold price futures, which also showed some resilience at the lows and resisted moving lower. And price popped up higher when the US dollar weakened slightly. And this week also tested for supply. Volume was actually a little bit higher in this market, almost up to the average, considering it only traded for 3.5 days out of the week. So there was some absorption going on in this market for sure. The narrow spread and the strong close suggests that whatever supply was being drawn out was being absorbed, was being bought by the market. And that's a sign of strength for the future. The other thing to note in this market is the consolidation so far is happening right up in the highs of the range. And the higher up within the range being this level here, the higher up in the range, the stronger the underlying sentiment is likely to be. So if you just quickly go back and look at the copper price futures, because we've got the range is here. This market's pulled back to this level, probably at 50% or even a bit further than 50% down on the range when it pushed higher. So this market at this point isn't quite as strong, whereas gold came in much stronger and is consolidating right up in the highs of this range. Silver price futures. Silver price futures saw some buying come in at the lows. We've pointed it out a few times. There was quite a violent test of the lows down here, but the test was positive. The price accelerated higher from that. Here's the breakdown line. There's the previous breakdown line. Price pushed above it 3 weeks ago. There was an attempt to consolidate here. And this week, there was a test for supply below the previous bar's low. But unlike gold and copper, which stayed at that level, this market has popped higher and closed higher for the week on a little below average volume, but pretty good volume for 3.5 days. There's definitely some enthusiasm in this market. It's most likely retail, although I don't know that for sure. But there is some enthusiasm in this market and there's a want for it to push higher. Like crude price futures have been horribly inconsistent recently. There was the lows of the range. Price broke down here. It attempted to consolidate, but it broke down again. There was a recovery. Price wasn't able to recover back above the lows of the old range. And it appears price is going to challenge those lows again now. And price is threatening to break down. It hasn't really done so yet, but it's threatening to break down. Spread was much narrower this week, but volume was lower as well. So that pretty much accounts for that at this point. We'll just have to see if there is a reversal in fortune next week, which would be much more bullish if price did this. But if there's further downside follow through of some type, that would suggest price is going to break down further. Aussie dollar currency futures traded the inverse of the US dollar this week. Price tested for supply below the previous bar's close for a period and then popped up higher as the US dollar moved lower. So this was pretty much just trading the inverse of the US dollar, and prices come up to the breakdown line here and stalled out at that level, which is probably the expectation, particularly on low volume, 3.5 days work. It didn't have a lot of effort behind it, a lot of force. So that was probably a likely place for it to stop. We'll see if it's got any strength next week. This market trades the inverse of the US dollar very strongly. It does have some fundamentals that play a part as well, obviously, but it does trade the US dollar inverse quite strongly. Bitcoin futures, this market's attempting to consolidate after breaking down 3 weeks ago. This week saw spread continue to be narrow. Prices remained above this 16,000 level, which is important. Volume increased this week to average, which was pretty strong really, and it suggests that buying support has come in this market. Whatever supply was drawn out has been absorbed by the market. So that's actually a positive for this market if there's some buying going on. Now, there's no way of knowing whether this is retail buying, whether it's professional buying, but two things so far. All these high volumes that I've mentioned a number of times over previous weeks, which mostly suggested buying support within this trading zone, it remains held at the moment. And there was further buying on this bar this week. Now, that's not to say if something bad happens, these positions won't be dumped, because they will. But at the moment, there's tentative support coming in and the market hasn't continued to sell off. So that's a positive for the market right at this point. Back to the US dollar just quickly. There's so many markets depend on this market. There's consolidation happening at this level, adjacent to this congestion. If it was to fail, you've got price coming back to this zone here. So if it was to fail, you'd see price come back to this sort of level. To have legs again for the upside, price would really need to move above this breakdown line. So price would need to move above it, probably test it for supply, and then it's in a position where it could accelerate away. So they're the two areas you're looking for at the moment. There's some chance that price will just attempt to consolidate above the 105 in a sideways pattern for some period of time while it recovers from this breakdown. But yes, further downside follow through, we'll see this level in play. And to really be confident of further upside again, just below 110, but let's say 110 at the moment, price needs to move back above 110 for the market to show a positive sentiment again. Apart from that, we're moving sideways. Okay, we'll do it again next week. Thank you. See ya.